Hey guys, this is Bruce Marshall from Simpler Trading, and today I want to go over a trade concept with you. And the sector we're going to look at today is gold. So if you've been trading gold for any length of time, you know it's been going up, up, up. It's been a great sector to be in. This is gold futures here, and this is a 1-year chart. We're looking from lower left to upper right, and I mean it's just been great. So in the gold sector, now we can trade the futures, of course, but in the gold sector, I have been trading the gold stocks. And we've traded, I'll give you some ideas here. We've traded Agnico here, made some really good money in this stock, in and out and in and out trading the stock. You know, hindsight's 2020. Maybe we should have just kept it. You know, I don't know. Some people buy and hold, some people trade them. The sector has always been a little volatile, maybe, to say is the right word. But Agnico, we've got Anglo. All these are lower left to upper right. Newmont's the largest there. I mean, it's great looking charts, right? Except for they all have this blip right here, and that's when the silver went parabolic, and then we had the big sell-off in silver right here, as you can see, straight up and then straight down. Same thing, happened in gold and all the related stocks. They did the exact same pullback. But the one I want to focus on today and I want to show you is Alamos Gold. Again, we've traded all these over the last year or two. Been really good. So what I wanted to do is have some exposure, long-term exposure to a portfolio. Say if you've got an IRA or a portfolio you're trying to get a little hedge to, a defensive name maybe, or just some something. If you've got other traditional stocks in the account, this will give you a little bit of diversification away from that. So I like to be in these, but again, I personally prefer to kind of trade them accordingly. And some buy and hold, but some I traded. This one was actually for a trade. Now we've been in and out of Alamos a couple times, but I came back in. I want to show you how this trade works. Super easy. So if you notice here, I went into this trade, and all this was posted in our live trading room and all that stuff. But I went in on, let me pull this down here a little bit, on December the 19th, actually that's the monthly expiration, that's where that red line is right there. So I bought, you see over that, and this is, again, I'm going to keep it really simple. That blue line is a 20-day moving average. Come up, touch that 20-day, up, back, forth. Now this had earnings. Again, 20-day held here, came back to 20, back to the 20. And that's kind of the lather, rinse, repeat process that I like to do. And essentially, you buy here, buy here, sell here, buy here, sell here, that type thing. To keep it very simple, right? So entered the trade on December the 19th. I wanted to keep it simple. I didn't want to do any options or anything like that, or a spread or a butterfly or anything like that. I simply bought the shares of stock. Again, this is going to keep it really, really simple. So I bought shares of stock, and I didn't know what was going to happen here. I knew we had earnings coming up out here, which were yesterday on 2/19, right? So I knew I most likely wanted to be out before earnings, because you don't ever know what's going to happen with earnings, right? Anything can happen. So I did something really simple, and I'll show you the trade here. I bought the stock. I bought it at 38.53, and I sold a 44 covered call, straight plain vanilla covered call. And I've got this set up as 100 shares and one contract. You could do 1,000 shares and 10 contracts, etc. But the math still works, right? So what that gives us, if you look over here in this left corner, our max profit there, and this is the Analyze tab on TOS if you're not familiar with that, the max profit is $672. Let me show you, 672 on 100 shares. It's $3,800, right? And actually with the call and all, it's about $4,400 in margin. So 672 on 4,400 gives you, that's about a 15% return. I think it's 15.2% return. And again, this was from 12/19 to literally 2/19, so it's 2 months, right? So that gives you 7.5% a month, kind of roughly, right? But what happened yesterday, again, let me show you. Over here, hover over that, you see that 2/18, they reported earnings after the close yesterday. I didn't know how that was going to come out, right? So as you can see right there, the earnings actually came in to be, they reported 54 cents was the actual number versus 49-cent estimate. So they beat earnings, right? Then the stock did go up. Here's where they reported. You see that little conference call phone right there? So they went up, and it was great. I didn't know if that was going to happen or not. We already had a profit in the stock, so I said, you know what? Let's just ring the register. We'll be out. The market's acting weird overall, all that kind of stuff. So I did. I closed the stock, and what I did was bought back that covered call right there, and then I just simply sold the stock. Easy in, easy out, right? So it's $551, and again, let's see, $551 on 4,400. That gives you 12.5 in 2 months, right? So that's 6% return a month, and you know, because you might look at that and say, well, that's not that much. Well, it's 6%, you know, in 1 month. If you have money in, you know, and I know it's not apples to apples, but a bond or a CD or something, you get 6% in a year in 12 months. I'm getting 6% a month here, or 12, you know, percent in 2 months. So, you know, $551, no sweat, easy trade, all that kind of stuff. And then we lather, rinse, and repeat, and we do it again. And what I will do, let me put this back out on a little bit longer time frame here. And it may not be this one. We may shuffle through and get AEM or some of these Newmont or some of these other ones. And when the chart gets right to the right point, there's a 20-day, there's a 50-day. I also use a lot of Fibonacci levels. We may look at some levels for support. We'll go back in and buy it and do it again. And again, kind of repeat that process. Go through. I have a basket of gold stocks. You know, we could use GLD, GOLD, you know, again, AGI, AEM, Newmont, etc. And we go through and find entry points on some of these stocks. So anyway, I want to walk through how the process works on that as a simple covered call. It's a great strategy, gives you some exposure. One last thing. So I could have, when I had this yesterday, I could have bought back, and I really considered this, should have mentioned earlier, so we had a 44 call. I thought about buying that back and say moving it up to say 50, reselling a 50 call and going out to like March and just roll it out for another month, because you might say, well, I don't want to lose my stock. That fine, you can do that, right? Here's 50, and this just, you bring in more premium and you make more money, and you just kind of keep the process going. In this case, because it was earnings, I didn't know what was going to happen. I opted to just go ahead and take the win on the position. So that is the thought process on a simple covered call, and looking at charts and how it works, and incorporating an earnings event in it, depending if you want to hold it over earnings or not. So I hope that helps. Hope it makes sense. Let me know in the comments if you have any thoughts on that, or if you need any help, let me know. I'm at Simpler Trading. I have a room there, and we do these type trades all the time. So thanks for the time, guys. I appreciate it. I'll see you in the next update. Thanks. Take care.